Mark Brantley here, your CU evangelist or your credit union evangelist. Thank you for tuning in to my video as we talk about the Community Reinvestment Act or the CRA and how it relates to credit unions. But first, once again, I appreciate you being tuned in to this channel and this video as we continue spreading the good news about CUs, or in other words, spreading the good news about credit unions. Now, on the last video, we kind of gave a preview about this particular subject matter because it was somewhat related to what we discussed last video, and that had to do with credit unions and their tax-exempt status. And it came out of that discussion, the CRA that is, because that is just another bit of information or subject matter that banks attack and accuse credit unions of not being required or mandated to follow. Just like it is with the tax exempt status, banks feel that credit unions should be taxed, but what they fail to realize are a couple of things. And we touched on this on the last occasion. One, the credit unions are not for profit. We put people before profits, and banks do not. They put profits before people. They answer to their shareholders. Their primary function and purpose is to make profits, is to make earnings so that it can be passed down to their shareholders via dividends. On the other hand, credit unions having a not-for-profit structure, we put people before profits because our focus is not on profits, but it is providing excellent quality service to our members. And that's translated in different ways. We don't have as our primary purpose profits, although we are in the business of making profit, but that is not the primary goal. The primary goal is to take what is earned and then pass it down to the members through lower interest rates on loans, higher interest rates on savings, and to just meet members' needs. These are the needs of Americans of modest means. These are the needs of the unbanked and also the underserved. And then there's the not-for-profit structure, governance structure when it comes to the board of directors. Most boards for credit unions are not paid. They're volunteers. On the other hand, with banks, their directors are highly paid. So there are some differences. And then there's also the fact of the matter that credit unions do pay taxes. They just don't pay federal operating income tax. We pay sales tax. When I say we because I was a former board member, former chairman of a large credit union. Also, I was a board member on a couple of trade organizations. And as a credit union evangelist, I consider myself part of the credit union movement. So that's why I'm using the term we. So when it comes to credit unions, there are taxes that are paid. Payroll taxes, Social Security, Medicare, unemployment, workman's comp. Those taxes are paid by credit unions. State and local income taxes are paid by credit unions. The only tax exemption is on federal income tax, and that's on operating income tax. So credit unions do pay taxes. They just have the benefit of not paying federal income tax on its earnings. And as I previously mentioned, those earnings are they're retained and passed back down through lower interest rates, more affordable loan products, higher interest rates on savings. So that's why we have that benefit. We also provide a social good. And we are in existence, credit unions that is, because banks failed to step into the gap to meet member needs. I gave an example of the credit union I was formerly the chairman of, and how that institution came about because you had city workers that were turning to loan sharks just to make ends meet. And the mayor of New York at that time saw the desperation of these employees and decided to do something about it. So what he did is that he formed a group of city employees, and they received a charter. And that charter was back in the early 1900s, and it still is in existence today. And to my knowledge, I believe there are about $4 billion in assets. And when I was chairman, I had the pleasure of leading that organization from $2 billion in assets to $3 billion in assets as the chairman of the board of directors. So there was this social good mission that not only this particular credit union, but credit unions around the nation. And this is the incentive that our federal government provides so that we can continue to meet the needs of modest Americans of modest means. So the other topic of today has to do again with the Community Reinvestment Act. And like tax-exempt status, banks often criticize credit unions for being exempted under the CRA. In other words, we are not mandated. Banks are. And the reason why they're mandated, and the very reason why the Community Reinvestment Act, a piece of legislation, was passed by Congress, is because banks were not investing in the communities where their branches were located. In other words, monies were flowing through the community into the bank's coffers, but there was nothing being returned. Banks would accept deposits, but they would not loan the money out to those in the community. And there was a process known as redlining, and you may have heard of that. I went over that last video. And redlining is literally when banks took a map and they drew a red line around certain neighborhoods that had certain zip codes, because typically zip codes are zoned with a particular demographic. And because banks were aware of that, they redlined certain communities. And although they may have had branches in those communities, although they may have accepted the deposits of hardworking Americans, they were not loaning the money back to those that were customers in their banks. So that is another reason why credit unions stepped in to meet the needs, the loan needs of Americans of modest means, whereas banks just were not doing that. So as a result of this redlining that banks were doing, this was under the Jimmy Carter administration. And whether you're a Republican or a Democrat, this piece of legislation was for the good of all of America. Because if any American suffers, you know what? We all suffer. And this particular law was passed during the Carter administration, and it required banks to not only accept deposits and to loan to the more upscale neighborhoods, but it also required banks to invest in the communities that were historically redlined, those of lower income and even those of that are middle income families. It was also to ensure that there was investments with regard to small businesses, because not only should people be able to buy a home, not only should they be able to pay their children's tuition, via a loan, but they should be also able to invest in a small business. So the CRA made great impacts in the areas of not just housing, but also with regard to small business investments. And as a result, the CRA has certain criteria that banks have to follow. And their regulators, which for the banks are on the federal level, is the FDIC. Also, I believe it's the controller of the currency, and also the Office of Thrift Supervision for certain other type of federal banks that are regulated. But also on the state level, you have the CRA is monitored. And when these regulators go into the banks then have to provide certain information to the regulators that examine them to make sure they are carrying out the intent of the Community Reinvestment Act. And after the regulators examine their files to see whether or not certain zip codes are receiving loans and whether loans are being made to small businesses in particular communities of low income and of modest means, then a score is given. There's a rating that ratings system that is under the CRA. And if a bank is doing well under the CRA, and if they are actually opening the spigot and providing access to capital to these community, meeting their credit needs, then they receive a score of 1. That means they have an outstanding record of helping to meet community credit needs. And then the next, which is not excellent but is good, would be a rating of number 2 or 2. And that would indicate a satisfactory record of helping to meet community credit needs. And then next, in terms of the ratings, would be a 3. And that would be a fair or average rating, which means that the bank is meeting the needs, but it does need to improve upon its record. So it's a need to improve number 3 rating with regard to helping to meet community credit needs. And if you have a bank that is just not meeting the needs, they are not loaning to these low income or areas of modest means, if they're not investing in community activity, or if they're not investing in small businesses, then they receive a rating of 4, which means that they are in substantial non-compliance in helping to meet the credit needs of that particular community. You know, it's one thing to have branches throughout a community to receive money, you know, but when you're not reciprocating by allowing that same money to be loaned out to that community, but rather you're loaning it out to those that are outside of the community, that just does those of that community a disservice. And that's why this law was passed back in 1977 and has been in place since then. And banks to this day have to follow suit. Now, credit unions, on the other hand, and this is why banks are screaming on the mountaintop as to why credit unions should not follow the same law, it's simply because credit unions do not redline. Now, I know what you're thinking. There are examples of credit unions that may not have loaned to their members. I'm not going to name any credit unions, but there is one of the largest of the credit unions that presently is involved in litigation, and you know the name. It's Navy Federal. They are allegedly accused of not making loans to minorities, namely African Americans. And if that is true, that is something that needs to be repaired. Let's be honest about it. There should not be any discriminatory practices. We should not mimic the behavior of those that provided the reason for us to be in existence in the first place. Why adopt the same philosophy of banks that did redlining in the past? But all credit unions are not created equally, and all credit unions are not perfect. And where there are instances where there's failure, then it's incumbent upon the credit union movement or industry to make amends. And until we actually get the facts, if Navy Federal is found wanting, I am sure because of the new management that is now in place that they will be able to make amends. But for the majority of credit unions, there is a reason why we are not mandated under the CRA, because when banks fail to loan to these low-income neighborhoods or the neighborhoods of the underserved or the unbanked, credit unions were providing access to capital. Not only are they providing access to capital, but they also invest in nonprofit organizations that also provide benefits to the communities, whether it's a daycare center or if it's a food bank, whether it's a homeless shelter. Credit unions make contributions to those local charities in order to provide safety nets and infrastructure to communities in order for those communities that are in need. So that is why credit unions are not subject to the CRA like banks. Credit unions do not, as a whole, have a history of redlining, but we are in the trenches. We are making the loans, not just loans, but quality, affordable loans. We also have short-term payday alternative loans as we seek to stomp out predatory lending practices by others, namely payday lenders. You know about payday lenders, how that's a never-ending debt cycle. And those that take out the loans and they leverage their paychecks, they are in a never-ending debt cycle trap. But if you are a member of a credit union and it doesn't take much to be a member, these days eligibility to become a member is broad. Whether you live in a particular geographic location, or you work for a particular employer, or you worship at a particular religious institution, there are a wide array of membership eligibility criteria that you will be able to find yourself a credit union to do business with. And as you do business, you are a member. And not only are you a member, as I mentioned on my last video, and one of the reasons for tax-exempt status that supports the notion is that every member not only has a right to be part of their own governance structure, a member of the board of directors or a member of the supervisory committee, but each member has one vote. Unlike banks, where your vote is weighted and it's based on the number of shares you own. So therefore, there is greater weight and power given to those that are large shareholders. In a credit union, every member is an owner and every member has one vote, which is a system of equality and a system of equity. And that is one of the stark differences between credit unions and banks. But for this particular topic, that is another distinction. Banks are regulated and are mandated under the Community Reinvestment Act, or the CRA, and credit unions are not. Because credit unions are in the business to combat the very thing that the CRA tries to rein in, and that is to serve the entire community. You can't just carve out the well-to-do communities and then leave behind those that are low and moderate income neighborhoods. They have credit needs as well. I am formerly from a low-income neighborhood. I grew up in the projects in New York City, and thank God that through my employment and then also my membership at a credit union, I was able to get my credit and my finances in order. And I am in a much better position today than I was yesterday, and even growing up in the projects. And I am thankful for the opportunity that credit unions provide in meeting the credit needs of those of modest means. So that is, in a nutshell, the distinction. And it answers the argument by banks why credit unions are not mandated or required to follow the Community Reinvestment Act. I hope that this video was informative. I hope that you will tune in on our next video, hopefully next week. And as I promised, I'm going to continue to put out content on a more regular basis. Why? Because I love spreading the good news about CUs, or in other words, spreading the good news about credit unions. Hope to see you on our next video. Please hit that subscribe button. Like this video if you found it educational, if you found it interesting. It would be appreciative if you would like it, and also subscribe to the Credit Union Evangelist channel. So until then, CU Evangelist signing off. Take care and God bless. Bye-bye.